Okay folks, welcome. Hope everyone's doing well. This is a follow-up on our Apple trade case study. I'm a little overdue in posting this update, but here it is. It's the follow-up where we took profits on our Apple trade. You do need to look at the first video if you haven't done so already. It talks about why we entered this position. I'll cover that very quickly right now. I identified what I call a high probability chart pattern, which is essentially when the stock moves up and then makes a slight correction. But the important thing is the stock then starts to move in its major trend. We can see once Apple at the time made this correction, the stock started to move towards that major trend. Now we entered this position using call options on the 10th of April. So right here where my mouse is right now, we set a target of 135 and we were almost at that target. However, I at the time exited the position on this bar here on the 27th of April because Apple at the time was due to release earnings and I did not want to risk my current profits with that level of uncertainty. When earnings release is around the corner, the stock could go either way, and you can see at this point in time when earnings did release, Apple has been moving to the downside. So let's take a look at the actual options trade. As I said, the position was put on the 10th of April. On the 27th of April, it was closed for a nice profit of 98.4% return on investment, a nice $925 profit. So, as I mentioned, the reason for the exit was really because, one, we were close to our target, and second, I did not want to be in this trade during an earnings release. So, we were able to close this case study for a nice 98.4% return on investment, which equates to a $925 profit in just a couple of weeks. So folks, hope it helps. You always need to know your risk in your trade. You need to manage your risk accordingly. And always remember that these videos are for your education only. Happy trading, folks.